Welcome back to Switzer on Australia's Business Channel. The week on the market started with a black cloud hanging over it, but over the course of the week, positivity has swamped negativity, at least on the local stock market. So how has Roger Montgomery's assessment of local companies been affected by what's happened this week? Now, Roger, that's the kind of question where I know the answer to you're going to give me.
Tell me what the answer is.
The answer is no change at all. Those companies haven't
100% correct.
But
no change. I remember in 1991 or 92, I think Westpac got down to about $2.
Have a few problems.
30 or something, yeah, and Kerry Packer was trying to buy it, and he was on the board.
Was trying to stop it.
And I remember ringing my mum, and I said to my mum at the time, I was working at a stockbroking firm in Melbourne, and I said, Mum, you'll never get the opportunity to buy a bank for $2 again. Now, how many interest rate cuts and rises have we had since then? Step back from all of that, and what has the share price done, and what has the intrinsic value of the business done? So I'm more concerned about the long-term intrinsic value rises.
So it can be marginal. Some of those things can be marginal, but not material for you.
Well, the stuff that's going on in Europe at the moment, and you know, I heard your previous guests talking about Europe, and the problem for Europe, of course, is that those individual countries have lost the power to print money. So they've abrogated their ability to do that, and as a result, they won't be able to inflate their way out of their debt, whereas the US can.
Yeah, I heard someone say during the week, one of my colleagues said why. So people out there would be wondering, why have they abrogated their ability to print money? Well,
they wanted a unified currency because they believed that they could be a stronger. That would be a stronger alternative to have a unified Europe than what existed.
So the ECB controls the euro, therefore the Greeks couldn't print more drachma.
Can't print more money, but the US can print more money, reduce the value, the paper value of its currency, pay less back effectively, and without any military involvement at all, basically steal from every other country.
That's a harsh way of putting it, but that's
effectively what's happening.
By the way, we've done that in our time. We've been great depreciators at various stages of our life. But anyway, go on.
Okay, so where are we? Where are we at the moment? Well, I want you to imagine an axis. So we've got a y-axis and a y-axis and an x-axis.
For normal people, you're talking about a graph.
A graph.
A right-angle graph.
And you draw a straight line across at 9%.
Okay.
And that's trend line growth. That's the trend rate of growth in China. Okay. Overlay on that line the business cycle. You know, you've got an undulating line of the business cycle.
The Chinese one or the international one?
The Chinese one.
Okay.
You can make a global one if you want. Doesn't matter. Just a different shape. But basically, every time that cycle drops, all the experts, you know, looking at their navels, say that China is going into a recession and it's going to crash, and they panic. But it never goes 7%, 8%, and then it turns back up again. The United States, on the other hand, its trend line growth, 1%. Overlay the undulating business cycle on that, and every time it dips, what happens? It heads below zero or very close to it, or goes below zero.
Recession.
So more frequent recessions, and certainly, if not more frequent recessions, fear of more frequent recessions. And that's why we'll continue for, I reckon, 12 or 18 months, we'll continue to see the sorts of sell-offs that we've seen recently. They're not going to go away in a hurry. In the last couple of weeks, we've invested, I think we had about 10 million invested out of 100 odd million back in April. We've now got about 33 million of 110 million invested. And I suspect we'll get another one of these bouts again in the future. I'm not predicting that. I might be wrong.
That's possible.
It's possible, and we'll continue to buy those businesses when those opportunities present themselves.
It's funny, you told me on Friday when we were at the expo that you actually, at the end of the afternoon, you put 5 or 7.5% of your money into the market.
Yes.
Now, but on Monday we were a little bit toey, you know, when we were down about 5.5%.
And we bought more.
Yeah, so you weren't toey. You were saying, bring it on. You're a bit like the Prime Minister. Bring it on, bring it on.
It's really not that complicated.
No, I know it's not. But
I go to Coles.
You know what? There are normal people out there who were panicked. And that's why I'm subjecting you to these sort of questions.
You've got to buy, I think it was Benjamin Graham said, I can't remember who said it, but someone said, you want to buy stocks the way you buy groceries. Now, I know that when I go through that entrance to Coles at my local Coles supermarket...
a company that you often denigrate.
Yeah, I'd rather buy Woolies, but I don't have a Woolies. I don't have a Coles nearby me. So I walk in, and if the strawberries are available for $2 a punnet and I can buy, it's 2 for $4.
Yeah.
Well, I'll buy 4 or 6 punnets of strawberries because kids love them, I love them. I'll buy a lot more strawberries. If they're at $7.95 a punnet, no strawberries this week. And it's the same with stocks. It's really, it helps to know what the intrinsic, or have an estimate of what the intrinsic value is, because you know when something is cheap or not. But value slaps you in the face.
Okay. Have you changed any of your A1s over the last week?
Here's an interesting one. JB Hifi, which I've actually just spoken about for you. JB Hifi has dropped from an A1 to an A3 for 2 reasons. One, their working capital jumped substantially. Why? Because the inventory went up. I'll talk about that in just a second. And the other reason was their debt went up because they debt funded a buyback of about 10 million shares. Okay. Now, what do I think about those things? Not a lot. I think JB Hifi is doing an amazing job in a really difficult market. They had 1.2% like-for-like sales declines year on year. Compare that to Harvey Norman, they had 3.5% or 3.8% or whatever it was, significantly more than JB Hifi. What does that tell me? JB Hifi is winning market share. That's what you expect to happen in a difficult, it may not be an official recession, but, for all intents and purposes, retail is in recession. So
is that the A3 still not a bad company for you?
It's investment grade.
You buy an A3 company?
We A1, A2, A3, B1, B2, B3. Yeah. They're our investment grade companies. Yeah. So JB Hifi, I think, is doing an incredible job in a really difficult space.
Rog, what was the lowest CommBank got to this week?
I have no idea, but I know we bought some.
Yeah, I think it got to... Well, so I saw a 43, but I thought it was 45. But maybe I was so busy I missed
I've got 44 in my head as a price we might pay for some stock.
I would have thought you would have bought because the intrinsic value was definitely higher than that.
Yeah, as I say, I give my portfolio managers instructions to invest X% this week. Yeah. These are the stocks that are trading more than 10, 20% discounts to intrinsic value. Go out and buy them at the end of the week. We have a look at what we've bought and then we adjust again.
Okay. Any other companies that have been affected because the share price, even though you don't watch the stock market generally,
here's the thing,
you do look at the price.
Some businesses haven't been affected, but the stocks have. Yeah. That's great. Let's take advantage of that. Yeah. So what are some of the companies at the moment that are popping up?
Give us some, Roger. Give us some.
Some that are interesting. Corporate Travel Management, which is a corporate travel agency. Flight Centre, Fantastic Holdings, Data3. What else have we got here? Oroton Group, still cheap. Cash Converters, although they've got some issues and opportunities because their Easy Corp has made a bid for them, but you've got to remember the fact the government's got a paper out about changing the rates of interest that they're going to be able to charge on the payday lenders. Yeah. Treasury Group is another one that's come up.
That's the wine division of Foster's, isn't it? Treasury?
No, Treasury Group is the funds management.
Yes, right.
The funds management.
Yeah, exactly. Yeah.
I got to be, no.
no, you're right.
Seymour White. Yep. Seymour White is the civil contracting company, which is going to be repairing a lot of Queensland. Yeah. Do I think that's going to change a lot of government contracts? Do I think that's going to change because of what's happening in Europe and the United States? No. They've got some management changes which I'd really like to get to the bottom of. Yep. One of the founders left and so on. So GR Engineering is another engineering company that we really like.
So the names you have all mentioned is the intrinsic value either close to
lower
or they're lower?
The intrinsic value
is above the share price.
The intrinsic value is well above the share price, is lower than the share price. Okay. And for many of these companies, we've got expectations that those intrinsic values are going to rise at a steady rate over the next few years.
Yeah, so they weren't just measuring because the share price would have gone down too much. You're actually seeing some actual real value in these companies. Oh,
absolutely. We wouldn't have invested 30% of our fund if we didn't think there was value emerging. Yeah. But that's not to say prices won't go lower. No. I'm no good at predicting where share price is going to go. No. I remember ARB in 2007 dropped below its intrinsic value and it was about 10% below intrinsic value. I suspect I wouldn't have expected it to fall 40% below that level, but it did. It fell 40%.
But you don't automatically sell when that happens.
No. It just went further below intrinsic value, and then it tripled and potentially quadrupled. So, you've got to think long term. Yeah. But provided you're buying good businesses.